Hello, everyone. Welcome back to Upside Down Data. So, the goal of this video is to give you a quick heads up about things that we're seeing on the charts today that provide reason for caution when it comes to the crypto markets and equities as well. So, if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter for regular updates about our content, including our risk indicators. So, what I have up here is the DXY. This is the US dollar currency index. And this is always important to watch when you are trading crypto or stocks because the DXY tends to be inversely correlated with risk assets like crypto. And so it's significant that today we're seeing a pretty substantial pump on the US dollar. And in fact, this is continuation. We can see that after bottoming at about 104 and a half or so, the DXY has pumped a reasonable 2.7% here, which is, for the DXY, pretty substantial move over the past few days. What we'd be looking for here is potential continuation to this level at about 108 to 110, where the DXY visited back in July. So it could be establishing a range here after finding support at a previous consolidation level. Now, as I mentioned, the DXY tends to be inversely correlated with crypto and stocks. And so when we see this kind of pumpage on the chart for the US dollar, we tend to expect some bearish price action on crypto. Now, we have not seen that coming in quite yet. It does look like, Bitcoin and Ethereum are more or less consolidating and kind of awaiting their next move. But this is often a leading indicator. When we see that the US dollar is bullish, the expectation is, or the bias really should be to the downside for the immediate future, for crypto and equities. And so this is a really important thing to continue to watch and see if it can break through this level here in the 108 to 110 range for the DXY, or if it'll get rejected off that level. But in any case, this is going to be a really important chart to watch over the next couple of weeks and beyond, but particularly in the immediate future. And so this provides reason for some caution on the crypto charts. This is also confluent with some other things that we're seeing across the markets. So another thing in addition to DXY that's always important to watch when you're trading crypto, but that is behaving in a particularly unusual way right now and potentially signaling some moves to come is the VIX, the volatility index. This tends to spike during bearish periods of time. And so what we're seeing now is an extended downtrend on the VIX. So the VIX has actually been in a downtrend for more than 2 months, which is a very impressive length of time. This is the longest downtrend that the VIX has shown since before COVID began. It's been kind of a slow grind to the downside here. These are daily candles, and it hasn't been the steepest move. So for example, earlier this year during an earlier bearish period, we saw the VIX go into a much steeper free fall, and it hasn't been quite doing that yet, but it's still at a bottom near the bottom of this range that it has carved out over the last number of months. So what that tells us is that there's potential for an increase in fear to come into the market. There's potential for the VIX to spike, for volatility to spike, and specifically for some downside movement to occur. There's no guarantee that that has to happen, but we always like to look for confluence here. And when we look at this alongside the US dollar index and we see that the DXY is pumping, that it's showing sustained bullishness here, particularly after the US Federal Reserve confirmed yesterday for us that it's planning to continue its regime of tightening and interest rate hikes. There's confluence here. We have confluence on the charts. We have confluence in terms of the messaging that's coming out of the Fed. And so that suggests that this downward motion on the VIX has the potential to reverse to the upside. And there is, to put it in a language that we like to use here, there's a fair bit of downside potential as a result that seems to be coming into the market for risk assets. If we go over to the Bitcoin chart and try to translate this into price action itself and figure out what we need to be watching, this is the daily chart here for Bitcoin. Well, the first thing that we can see that again is confluent with some of these bearish signs on the DXY and the VIX is that this recent uptrend that the Bitcoin price has been in has broken its trend line. So, since the middle of July, for a little bit over a month now, Bitcoin has been putting in a series of higher highs and higher lows at a pretty steep rate. So this trend line has been holding as support. It held as support first in the middle of July. Then at the end of July, it held as support for a bit here in the middle of August. And now, just a couple of days ago, really just yesterday, decisively, the price broke through this trend line and seems to be losing a bit of momentum. This is also evident on the RSI. The RSI is a momentum indicator. And so we would like to see when the price is making a series of higher highs that's mirrored on the RSI. But that's not the case. What we see here essentially is that the RSI has put in a triple top over the past few months, over the past really month. So, hitting this 60 level, bouncing off it, being rejected to the downside after that first peak there, and then the same level being retested even as the price made a higher high. And then once again, the RSI retesting that level even as the price made a higher high again. This is technically marginally higher than these previous RSI tops, but not to the extent that you would hope to see as the price continues to make these higher highs. So this is a further indication that the momentum has been draining out of this uptrend, and that's now been confirmed with this daily candle close below this upward trend line. So once again, we're looking for confluence here, and we're seeing confluence. The DXY is pumping, which is bearish for crypto. The VIX has been in an extended downtrend and could revert to the upside, even if that's just kind of regression to the mean, just kind of evening out a bit. And we see that on the price chart itself, Bitcoin has been losing a bit of steam, and that's reflected both in its losing this trend line yesterday and in the RSI seemingly kind of getting a bit tired down there. What this white line is that I have up here is an important level to watch, that if this downtrend continues, and if we were to see, let's say, another substantial red candle here on the daily time frame for Bitcoin, we would want to be watching this level carefully, right here at 21,849. And the reason for that is because this is the critical level identified by our Market Direction Classifier. I'm going to pull this up here so you can see what this looks like. The Market Direction Classifier is really just what it sounds like. This is a machine learning model which identifies critical levels above and below which the market direction can be expected to flip. And so we can kind of calibrate our bias depending on the market direction. So when you see the red here on the chart, that means that the price action is moving around below the critical level at that time. And when it flips green, then obviously the price is above the critical level and the market direction can be considered at that moment to be bullish. The yellow line here is the critical level itself. And so we are still above this critical level on the Bitcoin price chart. As I just noted, we're at about 23,400, and the critical level is at about 21,850. And so there is a little bit of daylight between the current price level and the critical level according to the market direction classifier. And so if we are to continue downwards here, if we see some more bearish price action over the next couple of days, potentially even the next couple of weeks, then we'd want to watch this 21,849 level and see whether that holds. If a daily candle closes below that critical level on the MDC, that would be a reason to flip your bias bearish and to expect a good likelihood of continued downside price action. So putting this all together, what this tells us is that there is short-term caution that's needed here. But at the same time, we haven't crossed that threshold where the market direction and our bias in terms of what we expect to happen next should change from a price action standpoint. So if we continue the downside, we'll want to see whether that level can hold. As long as the price stays above the market direction classifier critical level, then we don't need to make any kind of drastic reappraisals of what we're seeing here, in terms of this uptrend that has formed. I mean, this uptrend is still intact, so we're not going to be rash about it, and we're not going to recommend sell everything, get out. I've seen some people on YouTube making some very grand pronouncements about how it's all over now. We want to be cautious. We want to kind of continue to accumulate the evidence as it's presented to us. This is always our approach is always most compatible with a long-term perspective and with a dollar cost averaging approach where we're not looking to go all in or get all out. Um, Generally, not financial advice, but generally, we're looking to identify high risk and low risk zones in the market, kind of from a long-term standpoint, and to make gradual entries and exits as a function of that. And so that's the mentality here that I'm taking when I point this out on the charts here. But again, there is some bearishness on the charts, and that really starts with DXY. You can see this candle still pumping right here. It's showing no signs of stopping. So keep an eye on the DXY as you formulate your strategy. So hope you guys found this useful. Thanks for watching.